Hello, traders. Gary Wagner here. Approximately 12:45 in Honolulu, 6:45 in New York. It is Thursday, November the 4th, 2021, and this is the Daily Report for Gold and Silver. Just prior to the statement and press conference yesterday at the November FOMC meeting, we had gold trading off by about $23. However, after the statement and press conference, it recouped a little bit, closing down by only $16 per ounce. We saw a key reversal in the market today, with gold gaining 1.65%, trading to a high of $1,800 and closing at $1,793 per ounce. However, today's respectable 1.65% gain in gold and the fact that it reached $1,800 per ounce before backing off is a combination of a delayed reaction to the statement released by the Federal Reserve saying that they're not even going to begin to thinking about raising interest rates, coupled with the fact that the Bank of England has decided to keep their interest rates intact. Gold exhibited strong gains today, even in light of dollar strength. Today, gold opened at $1,769, traded to a high of $1,800, and then was last fixed at $1,793. You are looking at gold trading overseas down $1.30 at $1,792.20. The ETF GLD did have respectable gains at $1.88 per share, which is 1.13%. Considering that the dollar showed some strength today, gaining approximately 0.5%, currently fixed at 94.31, today's gain in gold of 1.65% was absolutely impressive. Between gold and silver, silver had the greatest percentage gain on the day, gaining 2.74%, opening at 23.53, going to a high of 24.15, and then settling at 23.86. In trading overseas now, it is currently fixed at $23.84.5. This first chart that we are looking at is a daily chart of gold futures, the continuous contract, and I draw your attention to the last trading days. That is this large red candle as well as the large green candle. We can easily see the effect initially by statements by the Federal Reserve. It did take it off the lows, but when we look at today's action and candle, it took out the open of yesterday's candle and closed above that today, actually trading to a high of $1,800 per ounce before hitting resistance. We've identified this price point as a major level of resistance. It now comes down to the jobs report. If the jobs report comes in strong, we could expect to see a little bit of backtracking or lower pricing in gold. However, as many believe, if we have another tepid jobs report, that would solidify the fact that it's not meeting the criteria of the Federal Reserve, and we could easily see an effective close above $1,800. Now, first of all, let's assume that the report tomorrow comes in below expectations. The forecast right now is an additional 400,000 jobs. But let's say it comes in like we saw over the last 2 months, 100 to 200,000 new jobs added. Where could we first see gold go to? And my sense is it would challenge the recent high that came in August that comes in just below $1,840 per ounce. We have a couple of areas that agree with that in terms of historical data, such as the action that occurred in July as well as mid-August. And that's what I would look for in terms of where gold could travel to. The fact that the Fed is adamant in saying that they want to have inflation around 2% and maximum employment is a big task indeed, because inflation is absolutely out of control, with the CPI being at 5.3 and the Fed's go-to inflationary index, the PCE, at 4.4. That's over double what their target is. So to bring that down, they have to be 100% correct in stating that the majority or vast majority of the inflationary pressures are transitory and based upon supply chain bottlenecks as well as labor shortages. However, if, as many analysts, including myself, believe that there is a large component of inflationary pressures that will be persistent, it will be a long time coming before the Federal Reserve raises interest rates. We are looking at a daily Japanese average chart, a Heikin Ashi chart, and I draw your attention to today's candle because the trading overseas is already forming a candle. It's very doji-like, and after a decline of 3 days, it's absolutely a pivotal candle. And if this continues to move higher, it will certainly indicate a reversal from the short-term downtrend back into a bullish mode. Lastly, we are looking at a weekly candlestick chart of gold. We can see that both on the daily as well as the weekly, we are above that threshold or upper level resistance line that was drawn from a series of tops, specifically this top here, as well as this top here. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.